Hey guys, welcome back to another episode of The Trading Edge, your weekly look around the markets. If you guys are brand new, this is a weekend video that I do each and every week, usually on a Saturday, sharing with you the best opportunities that are on my radar for the week ahead, along with some type of valuable trading lesson as well. I guess I should give myself a little bit of an introduction. I'm Akil Stokes. I'm a former struggling trader turned consistently profitable trader. Managed money for a little bit. I am now a trading coach. I'm also one of the co-founders of Tier1Trading.com, which is one of the leaders, right, in trading education. At least that's what Forbes magazine tells us. This past week was a very busy week in the market. There was a hell of a lot of movement. And looking at the economic calendar for the week ahead, I'll bring it over real quick for you guys. I'm expecting more of the same, right? If we kind of go back and just take a look at Monday's not really anything, but look at Tuesday, look at Wednesday, right? Look at Thursday, right? We have some high impact news events that are on the horizon. So it would not surprise me to see some more movement in the market. And one of the things that we saw last week, and this was after I think the earlier in the week news about New Zealand and Aussie and the change in monetary and policy, stuff like that, is we saw a lot of high momentum directional moves in the market. And something that I used to get yelled at a lot about when I was a younger trader was about catching the falling knives, right? I am a counter trend trader by heart, meaning I look for short-term reversals in the market. I look for periods of exhaustion where, the market makes a directional move, and then I look for exhaustion at that point and look to get involved in the opposite direction. I call it catching a little bit of relief. And I used to get hammered by this because there's this stupid kind of term out there that says the trend is your friend. And the trend can be your friend until it ends and then you go broke, but it also depends on what market you're in, right? If I was looking at an index, for example, yeah, the trend is going to be my friend, right? The path of least resistance. I think you always want to buy, go with that flow because the current is so strong. But understand in the Forex market, this is a completely different game. The Forex market, and even in comparison to stocks, is the exact opposite. We only trend about 30% of the time, meaning we're in consolidation or doing some type of reversal about 70% of the time. I heard this the other day is a great way of describing it. It is a mean reversion market, meaning that prices, basically it's a fancy way of saying it's going to consolidate. We're going to revert to the mean. So a counter trend trading approach in the Forex market is a lot different. And so if you're someone out there that uses it, don't be ashamed when people try to make fun of you if the whole trend is the friend joke. They just don't know. But you see these high momentum moves, and we saw this on, if you go across any of the Aussie pairs, any of the Kiwi pairs, New Zealand pairs, you'll see this as well. But you'll see these high momentum moves. And what we were waiting for all week is just periods of structure, areas of structure where they would come into and we'd see some relief. And you get moves like this, these V reversals where price action comes down and then spikes up. You get these all the time. And it was prime trading opportunity in the market last week. And again, don't be surprised if we see the same, especially as we have a lot of the pairs coming into key levels of structure. So I suppose let's get started by looking at one of those pairs. What do I want to start with? We'll just pick a random one. Let's see. So we're going to start off here on the pound yen, aka the beast, right? We nicknamed it that because it's a pretty aggressive mover. And you can see one of the V reversals that we talked about with the pound Aussie. Again, a lot of these pairs are having it. Now, you would think, or I guess the novice trader would think, like Akil, I just saw, all this high momentum, bullish directional movement. I've got to get long. And that is the exact opposite way that you want to think. If you're thinking that way, you're going to be a sucker, right? Because you're late to the party, and all your longs are going to do is provide liquidity for those who want to get short. And guess who wants to get short? Meaning sell. Everyone who bought down here, because that's how they need to take profit. So instead of looking at how you can buy, right, as we approach this level, and we're already in it, but as we get closer to maybe that 153 level, the upper end of this zone, right, start thinking about what you need to see on the price chart in order to load up for potential shorts, right? We should see some profit taking or continued profit taking as we get into this level. We should see a decline in the amount of buyers that want to be involved at this level. This is going to shift the balance. We should see the selling pressure take over, and we should see some type of movement to the downside. Again, if you get the correct signal, right? We never just want, I shouldn't say never, you can do whatever you want. I'm not aggressive enough just to put a limit order there and say, hey, I'm so confident in this level that I'm just going to put a limit order there and trade it to the bottom. If you don't know what limit orders are for entries, perfect follow-up on last week's video where we talked about the 6 ways you can enter a trade. I'm going to wait for the market to show me some type of signal. So I like to say predictive in my analysis, reactive in my execution, meaning I'm predictive in where I think price is going to go and what I think is going to happen at that level. But I still need to see something in the market that gives me a little bit more proof, and then I react to whatever I see as far as establishing my position. All right, next up is going to be the dollar yen. This is going to be a similar trade. I told you guys earlier this week, 0 for 3 so far. I've got one trade sitting on the table. This is the one trade, right? The bull cipher here on dollar yen, which came ever so close to stopping me out. You can see my stop loss down there at the bottom and is now rallying up. And what's interesting about this is my current target level after rolling my targets is right at the same level that we're going to talk about for a counter trend move. And that level is going to be the B leg of the pattern, which is right here at this inside VS1 level. So you see this green box right here, and I'm going to delete the pattern formation for you guys, not to confuse things. If you see this green box, this was the B leg of our pattern formation, right? You can see that this can also be looked at as a neckline of a head and shoulders pattern, right? Price has violated that level. We broke through rather significantly, right? Once previous support is broken, I would expect it to become potential resistance. So a good place to look for shorts is if we can rally back up into this level and anywhere between this zone right here at about 110.40s to the highs of this mini right shoulder up here at about 110.81s, that's going to be a good area to look for a potential short trade here on the dollar yen. If you want to add a little bit to that, we could add some Fibonacci confluence as well. Right, we're going to get a 3-2 right below there. How do I know? Because again, that's where my targets are at for the cipher trade. So hopefully we can push back up here. If we take a Fibonacci retracement from our intermediate high right here as well, we're going to get confluence in the form of a 618. So we may actually want to stretch this zone down a little bit further from our structure level here at 110.42, a little bit down to 110.32. And if we start to get our reason for entry in this zone, this is going to be a good area to look for sells. So next is going to be the Aussie dollar. This is going to be a similar trade, but a little bit different. Similar in that we're looking for a pullback, we're looking for exhaustion, but different as far as the bigger picture outlook. And I know you guys on YouTube, this probably won't make sense to you. In fact, it will, and I'll explain how in a little bit. But for you guys on the platform, this is what we talked about in the Foundation 2.0 course, right? Where we kind of wanted to eliminate the words trend continuation and counter trend. I know we have to use it for teaching purposes to explain stuff, but understanding that you can take a counter trend approach into a trend continuation trade. So looking at both the macro and the micro picture, right? If you guys are on YouTube, I want you to check out this video. I'll put a little link, little thing that comes across in the top. I'll put a link in the description box below as well. But a few years ago, I did I think I did a preview of a course called Bridging the Gap, the Foundation 2.0 course. Matter of fact, the same course that we have on the platform, I did a preview of that on YouTube where I think I go about an hour or so and talk about this stuff. So if you're interested in that concept, make sure you check out that video and everything will make sense. You can even pause this one and revisit it if you want. But the fact is that, the market moves in fractals, meaning there are moves within moves within moves. There are uptrends inside downtrends that are inside bigger uptrends that are inside bigger downtrends, and it goes forever like that, right? And this is one of those situations. So although this looks similar, right? Price action is pulling back. Bigger picture here, we are in a bearish continuation, or at least a bearish rotation type of module here on the Aussie dollar, and I do think we can go lower. Now, for you guys that are fundamentalists as well, you can add to the fact that, hey, if we're going to see, and we saw it this past week, if we're going to see this kind of risk on, risk off type of movement in the market, if we're going to see a shift to people not gravitating towards the riskier pairs like the Aussie dollar and moving more towards the safe haven pairs like the dollar, then this one's going to get hammered. Right? This one's going to get hammered because you have the dollar, which is the ultimate safe haven pair. You have the Australian dollar, which is a pair that people flock to when it's kind of risk on. We can see continued movement lower. We can see that Aussie get hammered and see that dollar strengthen at the same time. And obviously, this is the cross that takes both of those factors into account. So when we look for a type of pullback trade here, again, same thing. We're going to look for this zone right here, anywhere between this new structure low, this previous new structure low, and this outside return, this is the level that we're going to look for shorts at. Again, if we want to shrink that up some, we could look at even handled numbers, 75-cent even. Obviously, we have a nice little structure rejection zone up here, a little bit higher, 75.07s. We can also bring in some Fibonacci's from the swing high to the swing low. And we're going to get some confluence right in the middle, a nice 50% retracement right here. And I would bet a 618 from this intermediate swing lining right up in that area. Ooh, totally off. Look at that. Wow. 618 and 3D2 lining up here. We have a 786, which doesn't really mean too much to me. So that 50% is going to be the main level that stands out for me. And it's not technically a Fibonacci level for you guys that are Fibonacci nerds and you're going through the sequence and you're trying to figure out why is 50% there. But it is a psychological level just in human nature. Halves, quarters, thirds are very easy for us to understand. So check out Aussie dollar again for shorts once we get into this zone, and then look for potential continuations downward. We can revisit this maybe in Tuesday's midweek markup if we see some traction on it, but look for a continuation downward. This could be a pretty big play here. Next, we're going to go to Euro Aussie. We're going to switch it up some. This is still going to be a structure-based trade, as all of my trades are. Structure is the backbone of my philosophy. But this is going to be one called a 2618. And you can see that Euro Aussie, has recently given us a double top up here. You can't really see it on the 4 hour, but let's go down to a 60. There we go. It recently gave us a nice double top up here. And then what we did was we ended up violating really the V point of that double top. Well, if we can retrace back into this level, we're going to have a 2618 opportunity. Now, you can trade it as a kind of a classic 2618 where you actually look for that 618 level and you look to see price action hit that and give you a reversal reason in a zone that goes to the highs. Or you can just look for a retest of structure, retest to the lows around this 50% level, around this 159 even handle, right? Either way, it doesn't matter. It's all your preference. But look for a little bit of relief, right? We see the momentum slowing already. Look for a pullback and then look for that next opportunity to trade it down, because we're most likely going to continue to this level right here. Let's call it 58 even. And you can see if I draw a line out at 58 even, you're going to see a few things here. You're going to see some previous structure. That's the wrong tool. Sorry about that. This happens when I bounce between TradingView and NinjaTrader. Here we go. See a little bit of structure right there. Let's bring that horizontal line back in. There we go. You can see previous structure shelf right here. If we zoom out a little bit more, right, you can even see a level where we had a little bit of a structure swap. We're a little bit below it right here. But again, within this zone, you can see we had resistance, support, going back. You'll probably find more, but it's not too relevant going too far back. We want to look at want to have a recency bias when it comes to structure. So that's a decent level to shoot for. Real quick, and I'm doing this on the fly. See if there's any Fibonacci confluence there. Oh, look at that. 50% retracement right there. Can I get greedy and do one more? 127. We don't really know that this is the end yet. So we can't really draw a Fibonacci extension out. But let's say that this is the end of the move. Let's see if there's anything else. A 1414. So not too much down there, but that's going to be something we can draw on later. Anyway, yeah, so a good potential move down here again. If we can rally up to 159s, and then we've got 100 pips of potential downside down to 158s here on the Euro Aussie. So before we go on to our next pair, I want to take a quick break just to shamelessly promote something that I do, the Trading Coach Podcast, right? The Trading Coach Podcast comes out 3 times a week. It's not here on the YouTube anymore just because I want to clean up the space and reserve it just for trading videos, but it is available on your favorite music streaming or podcasting app. So Apple Music, Spotify, Google, right? Anything you could think of, Anchor, you should be able to find it on there. This week we had 3 awesome episodes. We had Trading with Systematic Discretion. We had Comfort, Fear, Learning, and Growth, which is a different look, a more in-depth look at getting out of that popular comfort bubble we talk about. And then we had The Work is Worth It. So make sure you check out those episodes and the other 500 that came before it. And if you like what you see, do me a favor, just leave me a rating and a review, and also share it with your network so we can continue to grow the show, reach and empower and motivate and help more people each and every week. All right, so we're going to hop over to the dollar Swiss. And I was going to do a few more pairs before this, but a lot of these pairs are showing the same things. If you've seen one, you see them all, right? The market doesn't have too many tricks. It tends to do the same thing, just in slightly different ways. So if you understood kind of the first ideas that we talked about, do your due diligence around the market, and you'll find probably about 5 more that are very similar. This one's a little bit different, right? The dollar Swiss, you can see we've come down into a VS1 level. That's that lovely green box that notates structure support. And we're consolidating. We had a good conversation about this in the live room this week about how I don't like, but when we see tight consolidations, especially ones that don't really move too much from the structure zone, I tend to think that we're going to get a breakout to the downside. Now, again, when I say I tend to think, I'm not setting an order right now to sell. Again, predictive in our analysis, reactive in our execution. I want to see some proof first. But in my mind, I start looking, if we can break down to the downside, where would we go to? And honestly, this can break down either way, or break either way, right? We can kind of create a little channel zone right here. We have the top end of our channel and the bottom end of our channel. If we break to the upside, we can expect to move up. If we break to the downside, we can expect to move lower. I do think there's a little bit more potential to the downside, to the upside. So that's why I want to focus on that today. And yes, before you say it, there is a pattern here, right? It's technically invalid now, but there was a pattern, X to A to B, B to C, C to D, a bullish bat right there. So if you're still involved in that, right, then you're hoping it doesn't break to the downside, and hopefully I don't jinx you. But let's talk about the future here. So if we can break to the downside, if we can break and close below these lowest lows, where could we go? And the next place that I see us going to is, again, this inside level of structure, right? Again, a VS1 level right here, giving us a key level of previous structure resistance. And right in the middle of this resistance, right, is one of those pregnant pauses. If I just take away that indicator, right, see what happened here, right? We came up, right? We retraced a little bit, high momentum move up, and then a little bit of a pause. And then a continued motion up, right? I like these levels. I think this is a good zone to make a projection of where price is likely to come to. So would not surprise me if we came down to 91 evens, maybe as low as 90.75 here on the dollar Swiss, if we get that break to the downside. Next is going to be the Euro Swiss, very similar to the dollar Swiss, where we're consolidating. However, we're not consolidating at a level of structure, right? You can see that we just broke and closed beyond a significant level of structure. And recently we've come up to kind of retest this level. If we go down to a lower time frame, and we can actually do this, right? It's going to look like a head and shoulders type of pattern with a kind of a rounded head, not your traditional head, but the same type of concept here, where you have a dip down here, right? A previous retracement right here, giving us a shoulder. You have some movement lower, and then we retest that neckline and find resistance once again before retracing a little bit. Now, this is a pretty significant point in the market. Again, I call this a structure swap. It's a corny name. Peter Brandt, who's a trader I look up to, he calls it an ice zone, which is a much better name. He's a lot more clever than I am and cooler, but I try. But basically, it is a level where previous structure support is violated and then acts as resistance. So again, price action held at this level. After we broke through it, it held on the other side. So if you can imagine ice, right? Ice stops you from falling in, right? Support stops the fish from jumping out. Resistance, ice zone, much better than structure swap. The point is, if we break this key level, I would expect a continuation up. And if we're going to continuate, right, up, we're most likely to come to this level right here. So again, there's a lot of room to the upside if we can end up breaking to that level. Obviously, different ways you can approach this. You can buy it as a breakout. You can wait for a break and retest. That's going to be up to you and your individual trading plan. Now, same thing if we do bounce to the downside, and we won't look at that now just because of the positioning to the market. But again, if we do move, this could be something that we come back and look at in Tuesday's video, the midweek markup. If we do break to the downside, there is room to the downside as well. You can see our next VS1 level is going to be pretty far away. I would actually take this up a little bit to the top of this consolidation zone. That's why I'm pretty conservative. 108.18, so probably not an opportunity for me. But to the bottom of this VS1 zone is going to be 107.89s, 108 even handle right in there as well. That's going to offer an opportunity to the downside as well. So before you go, make sure you check out the free training we have available at tier1trading.com, the Truth About Forex Trading series, 4 videos, how to really create wealth trading. You cannot trade without this, the tools you need for success, and of course, the special bonus video. Check it out, it's 100% free. Take steps towards becoming a better trader with no risk. Speaking of no risk, we do have a 14-day no-risk trial membership available on the platform. You can sign up, you can take some courses, you can download some software, you can join the live rooms, you can network with our community. You can do a lot for 14 days and it's only gonna cost you $1. And the reason we say it's no risk, because there's no sneaky auto bill or anything like that. Once your 14 days are up, you simply lose access and you can't log in anymore, right? It's that simple. Hopefully I see you guys on the platform. If not, I will see you this Tuesday for another midweek markup video. Like, subscribe, share, show me some love. Oh, who do you have? Comment below. Do you have England or do you have Italia? Do you have Argentina or do you have Brazil? Do you have the USA or Haiti, if anyone cares about that match? Anyway, let me know below who you're pulling for or who you think is gonna win. And until next time, plan your trade, trade your plan. Take care.